Hello, everyone. My name is Victor Lund. Welcome to today's RE Techinar. Today we have some very special guests that we've invited to talk about benchmarking profitability within your brokerage. We hope to provide you some information about how some very modern analysts and economists and the technology companies that support them are making great strides at helping to deliver profitability to a brokerage business. We'll go to the next slide. So just a quick introduction to myself. Again, I'm Victor Lund, and I'm the founder of RE Technology, and we built this site to be able to provide insights to real estate brokers and agents about the technology products and services that are really making a difference in their business. We've been operating RE Technology since 2010 and welcome 750,000 people to our platform. So it's been a great success and really is the only place to get this amount of information about using technology in real estate. I also operate the Wave Group. We're a leading consulting firm. We work with franchises. We run a couple of major projects in the industry like Project Upstream, Broker Public Portal. We have a communications company. We do communications for the Real Estate Standards Organization, as well as a variety of tech companies. We work with tech companies to help them solve data problems within the industry and help them with go-to-market solutions and many other things. So we're a pretty diversified, heavily experienced company. And with that, we'll go to the next slide. I do want to tell you again that today's webinar will be recorded. We're going to send you a recording of the webinar. And as we go through today's presentation, I'm really excited to have two very, very excellent presenters here with me today. Talking about some really modern philosophies around managing your brokerage towards profitability. We have a full agenda. We're going to be talking a little bit about a very unique partnership that has occurred between a technology company that builds financial software for brokerage and a coaching company that helps brokerage owners become more profitable. We're going to talk about the two different sides of managing profit, the income side and the expense side, talk about developing a purpose for your business, and highlight 5 of the purposes that are pretty exciting to realize within your company. We're going to talk a little bit about how profit is defined in a brokerage today, and then look at ways that you can shift gears and metric your business for more profitability. And we're going to close up with some pretty cool strategies that are going to be shared today by Peter Mueller, and that have resulted in some pretty extraordinary results for his clients. So with that, I just want to move to the next slide and introduce our panelists. I have 2 people with me today, Carlos Matias, and Carlos is an excellent man. I've known him for a number of years, and he's done some amazing things around the financial technology development area for real estate brokerage. Welcome, Carlos. How are you?
Thanks, Victor. Thank you very much. I'm very good. Thank you.
Yeah. Carlos, tell us a little bit about yourself, your company, how it was developed, and some of the major companies that you're supporting.
Sure. GriffTech has been around for about 21 years, so we have a lot of experience building real estate technologies. And we basically have helped a lot of franchise groups at various levels of their financial reporting. And internationally, we help them grow into their various markets, and we provide a full platform in the international space where it's full lead to close platform. But in North America, we focus on the financial aspects and the reporting from the brokerages up to the franchisee, and even from the franchisee up to their counterparts and headquarters. So we work with companies like Remax. We've helped them expand into over 80 different countries worldwide. Our platform supports over 40 different languages. And we're also now working with companies like Berkshire Hathaway and Better Homes and Gardens, as well as in various aspects with Keller Williams and Coldwell Banker. But the key here is that we do focus on the sort of small to medium-sized brokerages and help them grow. And that's why our partnership with Peter is so exciting, because he also focuses on similar things. So I'd like to introduce Peter as our other panelist.
Great. All right. Thank you very much. I'm happy to be a part of this presentation too, and I'm excited about sharing with you some insights that we've gained through our side of the the coin, if you will, of the organization, and sharing with you some profitability strategies and some insights. So I'm excited about being able to present to you today.
Very good.
Peter, if you want to go to the next slide, what I'd like to do is just start with Carlos here for a minute. And Carlos, can you just kind of frame up how the system gets started with increasing profitability for brokerages?
Yeah, so like I was mentioning, we know that a lot of brokerages struggle as they grow from a few agent office to try to make it a profitable center. And so that's why we focused iBroker as a tool for making that process much easier. We know that the products on the market can be quite complex and difficult to navigate, require a lot of training. So we really focused on basically making it as easy as possible for office administrators and broker owners to manage that transaction, and making the focus on paying their agents in an easy way, making it very easy for them to review their commission plans, and basically help them with managing that. And then this is where we partnered up with Peter and the Profit Center, because they had also this vision of helping brokerages that focused on revenue and increasing revenue, but still were struggling with profitability. And that's where Peter brings a lot of value to the table, where he does helps them focus not just on growing revenue, that's also important, but the profitability side is probably a key part that most brokerages don't focus on enough. And that's why our marriage of our very easy to use product and Peter's philosophies around profit really helps a brokerage basically use good technology tools, but really good proven models that Peter brings to the table.
Peter, are you unmuted? Yes. No, I'm unmuted. I'm sorry. I just wanted to wait for my cue there.
Yeah.
Again, from our side of the equation, we're excited about our integration with iBroker. Very excited about it, because from my experience working with hundreds of brokerages throughout North America over the last number of years, one of the biggest challenges that brokerages have is certainly profitability, and the tools that they need in order to get them to where they need to be is very, very critical. I think iBroker is just a tremendous product. We're so excited about when we looked at what they had to offer and how it helps us actually help our clientele by giving very good reports and helping us look at their bottom line and understanding their business like a business. We're just extremely pleased that we have this opportunity and this privilege to work together, and also to tie in the integrations together here that we have, as we can see in that last bullet point. It's wonderful when our customers can enjoy streamlined workflow between our applications.
Yeah, and the goal is to sort of blur the lines between technology and valuable tools that provide value, return on investment. Because we know from our experience that sometimes a lot of failed implementations of software is because there's a lot of training on how to use the software, but there's not a lot of training as to why the software is important, and that's where I think our partnership is going to solve that problem.
Yeah, totally agree.
Yeah. So from
Carlos.
Yes.
Yeah, go ahead, Carlos.
Yeah. So from for us again, what we focus on is making our product really easy to use. That's been a real focus for us, and we keep the interface of the application very easy to use, in that we make screens simple, terms really easy. We take that complexity out of paying your agents. We make the payment process as simple as we can, because commission plans can get complex and different tiers and different mins and max and all those kind of things. We try to build those into our setup so that it's straightforward once you get up and running. Our products are completely cloud-based, so they're very fast and scalable, and we keep everything very mobile friendly, so you can use this on your tablet, on your laptop, or even on your phone. And so that's been our focus, is easy access to the data and making it really easy to use.
Yeah, and on our side of the equation, we're a coaching, training, and consulting company. Profitability consulting is the name of our game and what we're all about. And from my personal experience being in real estate, I sold real estate for 10 years. I was a broker owner for 10 years. I'm now doing consulting, training, coaching in this industry for the last 14 years. And what I've discovered was profitability is at the heart of everybody's concern, even whether you're a realtor, a team, and especially a broker owner. And being a broker owner myself and my own personal experiences and the challenges that I've had, I realized pretty quickly that I needed help in this arena. And when I hired a consultant to help me in this industry, and this was a challenge, I actually had to go outside of the industry in order to find someone that was focused on profitability. I always had people to help me make more money, list more properties, recruit more agents, but I didn't have somebody who helped me on the profitability side. After my experiences from that side of the equation, I developed the Profit Center from my personal experience. So I'm very excited to share with you some of the information and the data moving forward, and a really great strategy in this presentation. So on that note, I think I'll dive right in. I'm going to start off with the two sides of the coin in managing profit. And I'm going to start off with the one side of the equation, which we're all very familiar with, which is the sales side of the equation. And this is the area that kind of drew us into the real estate business in the first place. We're all very good natural salespeople, typically, that get into this industry. A large portion of us are like that. We're doers. We want to get the deal done. We want to go from transaction to transaction. And as a broker, it's about recruiting agents. It's about bringing them in and keeping them in. And all of these aspects of this side of the equation, we're typically good at, or at least this is something that we understood was part of what we were going to do. From my own personal experience, it was the other side of the coin that I had less experience in, and I didn't understand it to the level that I understand it to this day, of course. And of course, what happens is a typical broker owner is a realtor initially. In fact, I would say 95% of our clientele were real estate agents first, then they became a business owner or a brokerage. And that's always been the challenge, because, you know, you take your sales acumen and you apply it into a business setting, and we quickly find out that there are two different animals, two different scenarios. And this was the challenges that I experienced personally, and I didn't realize it, even though I was a great recruiter, and I recruited 40 realtors from my competitors in the first 12 months. I was out on the phones doing what I was supposed to do, 2 hours a day, Monday to Friday, slugging it out, recruiting. But it didn't take long for me to realize that the more agents I brought in did not necessarily translate to profitability at the bottom line. And this is always the concern. I actually like using this analogy as the gas pedal and the brakes. Sales is the gas pedal, whether it be recruiting and doing those things internally in an operation. But financial operations is the brakes. It makes us stop for a moment, reevaluate what's going on in order for us to determine, okay, am I on the right path? Now, on that note, that's why I'm excited about our relationship with iBroker, because when you need to have proper reports, you need to have proper information in order to make proper assessment or interpretation of the data. A lot of times I've worked with many back office softwares where the information is so clunky, so confusing, so polluted that it actually almost renders the information useless. And this is my experience working with over 600 brokers personally in the last 10 years, that they're utilizing information and they're making analysis based on incorrect information. So this is why it's critical for me to be incorporated or to affiliate myself with a company I believe can provide the data necessary in order for me to help my clients in profitability. So getting back to this two sides of the coin, I do this presentation throughout North America for realtors, teams, and brokerages. It's the same fundamental principle, but sales drives volumes, and financial operations drives the returns on the volumes. And that was the issue I had. I had a bunch of realtors, at 60 realtors in 2 years, but I found that the return on those 60 realtors wasn't where I wanted it to be, or at least it wasn't worthwhile, or to a point that I wanted it to be worthwhile. So this is critical. We teach this all the way down the line, the two sides of the coin of managing profit. Again, and here's what I can actually commit to you on this webinar, that if you focus on financial operations management first, I promise you the sales will follow. I I vetted out hundreds and hundreds of brokerages, and I've come to this one conclusion that, and this realization, because we vet the information, we know the data, we can speak definitively to this point. It is the financial operations-minded brokerages that are the successful ones and the most profitable ones. There is no exception to the rule. So I want you to really understand that principle very, very concretely. I'd like to segue into what I call the 5 purposes of a business. Now, the 5 purposes of a business, I think when I review these 5 bullet points, I'm sure that pretty much everybody on the phone will agree with me and say, yes, I concur. I believe this to be true. But the other fascinating component of life, unfortunately, is that we believe one thing, we need not actually execute and implement on the other side. So, and that is always going to be the challenge. But number one purpose of a business, without a doubt, the number one is making a profit. Notice that the presentation does not say make money. You see, a lot of people make money, even your realtors and your teams, they make money, but how many actually make profit? I remember being a broker myself, and the people that were getting the cash advances the most were my top producing realtors. Why? Well, because they weren't focused on profitability. They were spending what they made. The more they made, the more they spent, and even worse, they got into deeper debt because they mismanaged what they had. And this is a big problem in our industry for our realtors and for our teams. And again, from the brokerage level, isn't our mandate in order to help them really overcome the biggest challenges of their life and of their businesses? And I'm telling you right now, it's profitability. It's not about how much money they make. It's how much profit or how much they have left over at the end of the day. And for a brokerage, exactly the same thing. I vetted out hundreds of brokerages, again, 600 plus in the last 10 years. And there are some that have hundreds of realtors that actually are losing money. So we know it's not volume. See, the volume side is the 200 plus agents or whatever it may be. But the return on the volume side is how much money they have left over. So profit is the number one purpose of a business. Number 2 is leverage time. Now, here's the reality again. I know from my experience, I work with startups to large organizations with 900 to 1,000 realtors in their organization. And in those, it doesn't matter where you are in that mix. But the reality is the majority of realtors that want to be a broker, they get into the business, they keep selling real estate, they hope to get to a point where they can now have to stop, or they have to manage both. They're managing the office, running the operations. They did the complete opposite of leverage time. They've actually consumed any free time that they had in the first place. And that's why making a profit has to be the number one focus. When I work with startups, I make sure that their compensation programs are sufficient in order for them to be profitable so they can get to that critical mass necessary in order for them to be totally leveraged. But a lot of times brokers, when they start into this business, they don't look at that. They just think in terms of, well, I was a successful realtor. I'm excited about helping others. And the worst thing that I've discovered is that they provide comp plans because they're trying to compete on price, which doesn't make any sense to me at all, because here these competent, successful people, they start off in this business, they're doing exceptionally well, then they want to evolve in their experience, and then they get into an environment and they actually do the opposite of what their listing presentation used to do, which was to get the highest amount of commission and get the house sold at the lowest amount, or the most money for the least amount of time. And so they change all of a sudden when they go from one to another. So leveraging time, it's about you being able to be in a position where you can walk away from that organization. You have competent people running it on a regular basis. But when the profitability isn't there, then you continue to manage it. You keep doing the hand holding, the nose wiping, and everything else. Differentiation is very, very critical too in the purpose of a business. In fact, when I started the Profit Center, that was my point of differentiation. There were plenty of coaching and training companies available in our organization. I've taken and I've been involved in those organizations on many different levels, especially as a client. And they always were teaching me how to make more money. But very few of them focus, if any at all, focused on how to help me create profit. So my point of differentiation at the Profit Center is simply that we want to focus our clients on changing their lives through profitability, because we believe that's the key to success. The same reason why we look and we vetted out different companies we want to partner with. That's why we love iBroker, because we believe they have the tools and then the analytics necessary in order to help us help our clients. So points of differentiation, what are your points of differentiation? What makes you different? Why should they join you? If you were going to try to recruit somebody, if you can't definitively define, just like I just did, my point of differentiation within maybe 3 bullet points and be able to quickly articulate that, then all we have now is we're going to compete on price. So differentiation is a huge purpose of a business. Number 4, professional fulfillment. I know for myself, being 34 years in the real estate industry, I started at 19 years old. I love this business and I will die in this business. And I love how I had the opportunities to evolve. And I'm sure it's the same for you. At least I hope you haven't lost that love of doing what you do and the fulfillment that it can achieve. But I also realize that a lot of people's professional fulfillment is directly tied into their ability to do, number 1, make a profit. And when you're not making a profit, you tend to get a little bit jaded. All of a sudden, you start to resent even the realtors that work for you, and that is not a win-win relationship. One of my favorite books is The 7 Habits of Highly Effective People, and habit number 4 is win-win or no deal. So professional fulfillment, definitely a huge part and purpose of a business. Number 5, one of my favorites, have something to eventually sell. So when you create something that has, and you create equity, you've got something now you can sell. And that's why we're involved also with mergers, acquisitions, and conversions, because we want to help our clients. Now, whether they want to sell at the end of the day or not is not the point. You build it as if you're going to sell it. And that's the point of the exercise here. So I'm going to give you a scenario of a typical brokerage situation, and I'm going to hope to paint you a picture or create an illustration of a couple of things. I want to show you how when you look at your income statements and your balance sheets, unfortunately, it doesn't tell you a story. All it does is helps you mitigate, or your accountant's job is to help you mitigate your taxes and balance your books. And that's all well and good, and that's critical, important to keep you out of jail. All of these things are necessary, but the reality is it doesn't tell you how to operate your business. And unless an accountant has numerous clients that are in the same field and has normalized the data, that information doesn't tell you a story. That's kind of what we have done. We've normalized data in order so we can compare apples to apples, metric to metric, so people understand and know how their business is running. So here's a scenario I'm going to paint for you. Let's say this brokerage, and I know we've got a number of people on this webinar, and maybe from startups to larger, mid-sized to large organizations, but I'm going to use an example of 30 realtors. Let's say that they potentially could grow to 50 in what I call their future state, so they're not fully realized. Their franchise fees per realtor, let's say, are $3,000 annually. And let's say that half of those 30 realtors pay those franchise fees on an invoice every month. And the other half, they pay their franchise fees rolled into some sort of an alternative payment plan, like a percentage fee kind of comp plan. So that's a scenario that we see very often. Let's say that broker still sells real estate. They own their own building. They manage the office, so they do the day-to-day management. And let's say that it costs about $100,000 every 5 years to replenish furniture, equipment, carpet, paint, franchise agreement. Now, there's a couple of benchmarks I'm going to share with you guys that I think are going to be invaluable to you regardless. Number 1, many times most broker owners, if you will, manage their own office. And because it's a very subjective thing how much they pay themselves, sometimes they don't formally pay themselves a set salary. And again, these are accounting decisions. The accountant says, hey, look, here's what you got to do. You know, you make it a profit, leave the revenues in as retained earnings in your corporation, and then you just pay corporate tax and blah, blah, blah. But again, accounting and operations are 2 different animals, and this is the biggest challenge. So when you're looking at your operations, I look at it from this perspective. Whether you pay yourself a salary or not, that job is worth something. And if I'm going to actually buy your company, if you look at it from that scenario, and if I don't see a meaningful management salary in the income statement, that consequently is going to come off the bottom line profit of whatever that income statement says. Now, here's a benchmark I'm going to give you that the manager salary component, doesn't mean this is what you pay yourself, but that component is worth about $2,000 per realtor per year. So in this scenario with 30 realtors, that job's worth about $60,000 a year. Now that's a benchmark. That I know we have different demographics and changes and so on, but we need to benchmark it somewhere, because if you compared your income statements with everybody else on this webinar, it wouldn't make any sense, because everybody does things differently. Now, so that being said, I'm going to walk you through this scenario. This is sort of like a snapshot of what an income statement could look like. So I just want to show you how we have to normalize data in order for it to make sense for everybody. So for instance, let's say the broker sells real estate and left $50,000 of their gross commission income in the business. Now, this is very critical, because for those of you that are on the phone that are thinking about acquiring offices or merging with somebody else, don't you want to know whether or not they, number one, sell real estate, and number two, did they leave any of the money in the business? Because if you're going to make an evaluation on whether or not it's a good opportunity, that's going to be critical. I had a broker client that I worked with where they purchased an office with 30 realtors, and he said they had $100,000 of net profit of the bottom line. My first question to him was, does that broker sell real estate, and did he leave any money in? And he didn't have an answer for this. This is after he pulled the trigger on the deal. So again, guys, this is critical. So in this scenario, let's say that 50,000 was left in. So the profit center, we adjust that out and we normalize that to 0. Let's say that we look at the income statement and it says franchise fees collected revenue, so 45,000. So again, we want to eliminate flow-throughs out of the equation, because they just mess everything up. I don't have time to even describe to you on this webinar how many ways that can mess things up. But when I look at an operation and I try to vet out its profitability, the franchise fees collected and received or expensed out, I eliminate out of the equation. So let's zero that out. Next is, let's say on your income statement, you see something that says percentage fees income. This is if you have a 70-30 split or 50-50, that 30% that you collect goes into a bucket called, hopefully, percentage fee income collected on an income statement. But in the scenario I just gave you, let's say that a number of them paid their franchise fees. It's rolled into that percentage. So now we have to extrapolate that out of the equation in order to normalize truly what kind of revenue you had, in this case, 105. Let's say the balance of the revenue is 255. So the bottom line equation is, if your income statement, for instance, says you have a gross profit of $500,000, well, and I'm going to speak to this point, by the way, the most critical, the most important numbers, in my humble opinion, and I'll stand by this, that you need to measure in order to manage profitability is called your gross profit per realtor. I believe that's the most important number of your business. That's the number that you need to manage. Most back office softwares do not manage that information, or not appropriately or correctly. And that's why, again, with our collaboration with iBroker, we're ecstatic, because now it's going to actually make my job easier and make it easier for the client to understand what's going on. But in this equation, if you did not normalize what I just did, it would say that you're averaging $16,600 per realtor in gross profit. Again, gross profit is the money that you get to use to spend on your expenses, and hopefully what's left over is profit. But you notice after I vetted this through, that we found that the true gross profit of the organization per realtor is $12,000. Because if I take 30 divided into 360, that's $12,000. Now, if that's the most critical, most important number, if you trust me and have faith in my experience on this, then you would have been completely misled if you didn't take into account these franchise fees that were polluting the income. So in this equation, $12,000 is the true gross profit per realtor of this particular office. That's on the revenue side. So you can see how things can easily be polluted on the revenue side. How about the expense side? Well, let's say this income statement shows 60 grand in expenses, but we know that the broker owns that building. And if I would ask the question, what is the normalized rent? If I was going to buy your company today, how much rent would you charge? Let's say they say 80 grand. Then I want that number to use in my evaluation of this organization and how good it is. So that's a plus 20 adjustment on the expense. Now, let's say I look again on that income statement. Oh, there's no manager salary. Now, the broker could have taken money out in gasoline, different shareholder benefits, as I like to call it, travel, this, that, and the other thing. I had one broker who even put their their children's school education through their business. It doesn't matter. I don't care. Bottom line is just realize that if you're looking at your numbers or looking at someone else's, wouldn't you think that would be a good thing to know? So what I do is I adjust that by $60,000 because there's 30 agents in this office. There's no management salary. If I was going to buy this company, if you will, or look at it, I want to know that, hey, you need to put in a management salary to run it. Now, whether I pay myself that or I pay or somebody else to run it, bottom line is, again, this is where information is so critical to understand. I'm not going to speak too much about amortization and depreciation, but just realize that amortization and depreciation, like when you replenish furniture, equipment, when you renew the franchise, if you're part of a franchise organization or not, all of these different costs are part of your budgeting. They're necessary for you to understand how to run your business. So you need to normalize that also if you're looking at a particular income statement. Franchise fees expense in this equation. If I'm going to eliminate the franchise revenue, I'm going to eliminate the franchise expense in order to normalize the information to see clearly and to take it to the bottom line. An income statement could show $120,000 net profit, as you see in this equation. However, when you normalize the data and you look at it for what it really is from an operational perspective, see, from an accounting perspective, that may be correct, and that's fine. 120 grand net profit, that's fine. But if you're looking at it objectively, this is the net profit on that particular office, minus 20,000. And that's the point I want to drive at. How can you possibly, I use a statement all the time that's a fundamental truth of life, which is what you measure gets improved. What you measure gets improved. If you're not measuring the right metrics, you don't have the right back office management software in order to do that for you, then how can you possibly improve it? It's a fundamental, unrealistic reality that if you don't have proper information, you could actually be measuring the wrong things and making the wrong decisions. And that's exactly the problem. And that's why you need solutions for back office management. That's why you need solutions for profitability consulting, so you can understand where you're at, compare to your peers, and then here's how we move forward, which is strategy. Now, on that wonderful note of strategy, let's talk about that for a moment. So again, I'm just going to give you a quick illustration. This is 2 coaching clients that I've worked with in the past. I'm using this as an example just to illustrate the points that I've just given you just in the last number of moments. So let's say on this side of the equation, this client or brokerage has 50 realtors versus this one with 224. They have coaching client A has 943,000 in gross income. Client B has 1.6 million. The production per realtor on client A is 94,000 per realtor. The production per realtor on coaching client B is 105. So this is the volume side of the equation we talked about in that illustration, the 2 sides of the coin. There's the volume, basic, strong volume numbers. However, let's talk about the other side of the coin, which is the return on that volume. So client A has a return on that volume of 466,000. And client B has a return on this volume of 224 agents at 286,000. Now, if I would have before illustrated that particular net profit point, most of us would have said, oh, I'd love to be client B. 224 realtors, 1.6 million in gross income, 105 production per realtor. Just looking at those numbers, which is the ones that we always validate and celebrate, but look at the net profit. So the question is, why is the net profit minus $286,000 with 224 realtors, where somebody with 50 could have almost $500,000? And by the way, these are real numbers. I just rounded them up just so it wasn't too cluttered. But I have real numbers to illustrate with you. I'm not making any of these numbers up because reality is actually greater than fiction from my experience. So here's the bottom line reason why one has profit and the other one doesn't. The gross profit per realtor average that broker client A has is $17,800 per realtor on average. That includes team members, by the way, for those of you who have teams in your organization. It represents taking the total number of licenses, if you call it that, and dividing it into your gross profit. This broker is averaging 17.8. Now, I have some, they range from 5,000 gross profit per realtor to over 20,000. So I'm using this as an illustration or example. And on the other side, this brokerage, here's the number one problem. $7,220 is their average gross profit per realtor. That's the reason why they're going broke. This is the reason why they're not profitable, because they can have as many agents as you want. And I always said, I remember somebody like this came up to me and says, Peter, you got to help me recruit more agents. And after I did a profitability assessment of their organization, I said, my friend, if I help you recruit more agents, I help you to bankruptcy quicker. So that you see, the issue is not driving more volume. The issue is driving the return on the volume. In this case, the gross profit per realtor. Guys, trust me on this, that this is as difficult as it gets. If you can focus in on that number and you understand what your strategy is to move that forward, that's how you build profitability in organizations. And I'm going to show you that in the killer strategy. All right. So let's go over to that slide here. So that again is the return on the volume side. I forgot about my moral of the story, but I think I pretty much emphasized it in this illustration. Gross profit per realtor. That's the revenue, net revenue in your pocket that you get to spend on expenses. That's the most important metric of the brokerage business. And I would argue that fact till I'm blue in my face. I've only done 600 analysis of brokerages throughout North America. You can take that point to the bank. Now, I'm going to share with you what I call the killer strategy. So now I shared with you the theory, the two sides of the coin, the 5 purposes of business, and I also illustrated to you the most important metric of your business, which is gross profit per realtor. So let's now take all that theory and apply it to an application or a strategy. Now, I want to share with you this, that in general, I never share my own personal experiences predominantly. I've learned so much from my clients. I've learned so much from my experiences over the last number of years. That's typically the source of all the strategies and development we've done. But in this scenario, guys, I want to tell you that this is my story when I had my brokerage. And this is what I learned from my profitability consultant at the time. And this changed my business. It changed my life. It allowed me to sell my business in 2003. It's called I call it the killer strategy. That's just the name I came up with it. And one of the things my coach taught me was, again, this whole gross profit per realtor principle, how incredibly intricate and important that number is. And again, if you don't have a software to help you manage that, then you can manage it on a spreadsheet, but it's going to be a lot of work. So again, that's why I'm excited about my relationship with iBroker. So let's talk about the killer strategy. It starts with a goal. So what is the goal? Now I have clarity. I just need one goal. I want to increase my gross profit per realtor from 7,000 to 10. That was what I truly had, 7,000 gross profit, rounded it up per realtor on average. I want to get it to 10. Why? Because I'm going to show you the numbers. So I had 60 realtors at the time. This was back in the year 2000. I was averaging $7,000. And so consequently, that equates to $420,000 in gross profit. That's the bottom line revenue number. That's the gross profit that I get to work with. Now, my expenses were $370,000. I paid myself a very healthy management salary. But I got to tell you something, folks. I came from a very lucrative sales business, $120,000 management salary. I just benchmarked that according to what I mentioned to you before, $2,000 per realtor per year. I wanted just to show you this into the equation. So my total net was $370,000. And my net profit was $50,000. Well, as far as I was concerned, with 60 realtors, that was whoop-de-doodle-doo. I was not excited about that, especially now they have the risk and the liability of 60 realtors. I left a $250,000 plus sales environment to start a brokerage, and this is my net result. Wasn't happy with that. And by the way, here's the other thing I'd like to mention in that point. Because my net profit was only $50,000, that's created the pain point for me to initiate change. That's why I hired somebody to help me, because I wasn't able to do it myself. So that was my net profit, $50,000. So here's the point. This is a clear goal, by the way, for brokerage. Not I want to go from 20 to 30 or 10 to 15 realtors. No, my goal was simply this. I want to just grow my gross profit per realtor from 7 to 10. Simple, but that's what drove the profitability. I'll show you this in a moment. So my goal, target, if I could get $10,000 per person on average, and I got 60 realtors, well, that's easy math. That's $600,000 of revenue. And with my expenses being at around $230,000, that gives me $230,000 or 370 grand in expenses, as you can see up at the top there, minus 600, that leaves me $230,000 net profit. Now I'm excited. Now, I haven't implemented anything. All I've done is clearly define a goal. Look how clear that goal is, first of all, and how simple it is because you're equating it down to one single number, gross profit per realtor. Okay, so 230, that's the goal. That's what I want. How is that going to work? Well, let's take a look at this. Like I said, my favorite saying, what you measure gets improved. So here's what I did. Again, this wasn't what my coach taught me. This is what the core principle that I was taught led me towards thinking this thought. Hey, let's take a look at those 60 realtors. How many of them are already above the 10 grand target that I set? So 33 of them are already over 10 grand, which is great. That produced 363,000 of the revenue that I currently had. And 27 of my realtors, 27 of them, 45% of my realtors were under the number. And then when I looked at grouping those 27 together and said, how much did they earn me? I found it was only 60,000 bucks. So 86% of my net revenue comes, or gross profit comes from 55% of my realtors. That means if I even fired the bottom 27 realtors, I'd only lose 14% of my net revenue. And that's the whole point I'm trying to drive at. Now, that wasn't what I did, don't get me wrong, and I'm not suggesting anybody to do that. But I am suggesting this, that when you start to measure stuff, what you measure gets improved. What you measure gets improved. And again, where did that come from? What was I measuring? I was measuring what I was sharing with you before, the gross profit per realtor. Now that I've come to this realization, I'm going, holy mackerel. Now, and by the way, the tail usually wags the dog. And you know when we usually let that happen? It's the bottom quartile that we always cater to, because we're always trying to keep agents in, because we don't have a recruiting strategy that keeps bringing in agents net to us. So sometimes what we do is we make the mistake of catering to the bottom quartile. So let me show you the results, and then I'm going to show you the process and how I implemented this. Here's the bottom line results. After I looked at measured this information, implemented the strategy, here's the bottom line results. Number one, I lost 10 out of the 17 or the 27 realtors. Oh, boo-hoo. Oh, gosh darn it. Well, that was the result. Okay, let's keep going. However, the 17 that remained out of the 27, I was able to drive their gross profit up to $9,000 per realtor because I had the guts to make a change. I lost 10 in the equation, but those 17 where I was able to drive up their gross profit effectively throughout a 12-month period produced now $153,000 of gross profit for me. And if I take the 363 that I get from the top 33 realtors in revenue, 363,000, plus the 153 below that I've now driven from below, that now gives me $516,000 in gross profit. And by the way, let's take a look at that again. Before strategy implementation, 60 realtors, 420,000 in gross profit, 370 in expenses with a 50,000 net profit. After strategy implementation, lost 10 agents, but now I've got $516,000 in revenue. I've got $350 in expenses, and now I've got a net profit of $166,000. Tripled net profit in 1 year with 10 less realtors, and I did it without raising fees. Now, if I know we got a number of people on this call today, but if I would ask you the question, who would like to know how that happened? I'm sure you'd be putting up your hands right now, so don't worry, we're going to share it with you right now. So this is the net result that I want you to see. Now notice here again, 10 less realtors, less volume, but more what? Return on volume. And that's what I'm talking about, the two sides of the coin. So let me show you how this was done without raising fees, because most brokers, you tell them that we are able to triple our bottom line profit without raising fees and losing 10 agents, they would think that that's impossible. And the reason why you would think that that's impossible is because you're so busy doing the day-to-day that you don't even realize there's a strategy that could help, that you could implement. And that's what we do. We look at how to create strategies. So here's the strategy. So it's a 4-step or 5-step process. Number one, I started off with the brand new hires. The brand new hires that started with the company. It took me 12 months to incorporate or integrate this strategy. The net results you saw was after the 12-month period of involvement. So I started off with the brand new hires, even the new licensees, and I incorporated the new gross profit per realtor target. I put the monkey on the back where it belonged. I basically said to them this, said, listen, I need $10,000 from you. Here's how I'm going to get it. I want to let you know. And of course, we shared the value proposition. Of course, we stroked them. Of course, we tried to bring them into our organization. But I also expressed what I wanted, not just what they wanted and try to speak to that. I also then expressed what I wanted. I told them straight up, total transparency. I need 10,000. Here's how we're going to do it. Here's my comp plan. And if that's acceptable to you, then sign off here. Let's get started today. I can't wait to help you with business planning. Can help you with your profitability, your financial management. I'm here to help you. I'm here to make you more profitable. But it's got to be win-win or no deal, like I said before. And that was my win. Their win is they got me to help them with their business planning, with their financial operations management, driving more revenues and lead gen, because I cared about them. But I also need to have a return so I don't begrudge them, so I don't start to hate them, which is what happens. Because you need, and so that was the first start. Brand new hires right out of the gate. Process number 2, I only did this on contract renewal with the existing realtors. I sat down with each single one of them throughout the 12-month period when their contracts came up for renewal. And regardless if you have a contract or not, I would suggest that you set once a year where you sit down with them. That's just a great date in order to do it, because it spreads it out throughout a 12-month period. You don't get overwhelmed. But on contract renewal with the existing 60 realtors, I want to tell you that what I sat down with them, I basically incorporated this new accountability to the gross profit per realtor. Now, it was simple dealing with the realtors that were above the line. I basically sat them down and I said this, I said, guys, I got great news. You know what it is? Your fees aren't going to go up. And by the way, you know why I don't have to raise the fees? Because I'm going to get the money from the bottom quartile. That's where it belongs. That's why it's important for me to let you know. I just need your support on this. And I tell you what, top producer, when they hear you talk like that you know what's going on, you understand your operation, and you're also going to be taking it from where it belongs, they become your raving fans. So I sat down with each and every single one of those realtors to do that. Now, the point of the matter is this: there's 2 groups of realtors, the 33 above and the 27 below. The 33 above, that was simple, what I just described. The 27 below, I said, hey, I got good news and bad news. Do you want to hear it? The good news is I'm not raising the fees. The bad news is I'm going to keep you accountable to $10,000 gross profit per year from you, and it's going to be driven from your comp plans in such a manner. But if you don't hit that mark, I'm going to let you know that I'm going to take the differential of what you owe me off the next subsequent deal. And if you have a problem with that, there's the door. Don't let it hit you on the way out. But if you're okay with that, and I'm here to help you, I want to help you achieve your goals, then let's get started. Now, that's where it happened, where 17 said, yeah, I can do it, and I want your help, and thank you very much. And the bottom, and those 10 that left, so what? They were not willing to be accountable. But look at the bottom line results. We tripled profits because now we weren't kowtowing to them, and we weren't creating comp plans in order to accommodate everybody. We created comp plans to accommodate the top. And that's how that conversation went, and that's why we even lost a couple of those agents, but so what? You could see the bottom line results. Step 3, we now measure gross profit per realtor monthly, which is exactly what we want to work with iBroker on. So give me that data. Let's take a look at these realtors. Let's see their gross profit per realtor monthly, and we manage that. So whenever somebody did a deal or a transaction, simply this, what we did is we managed the shortfall. So when that deal came up for, came up on closing, and now is time to pay the agent out, we looked at the gross profit. If they're above or below the line, if they're below the line, we made up the difference and we added it, tacked it on. And that's exactly how we managed the revenue, by picking up the shortfall on subsequent transactions. And that's as simple as it was. But I got to tell you something. Not a lot of people have the guts to do something like this. But I can tell you one thing. When you feel enough pain and you are passionate enough to be profitable, and you're passionate enough to take your game up to another level and truly help the people that want to be helped, then I can tell you something. This becomes a lot easier. And you have to get to that point where you're willing to make difficult decisions sometimes in order to make a difference. So process, or step number 5, is simply this. We now can leverage iBroker, our back office solution. It allows us to capture this information easily and effectively, helps us manage that on a regular basis. And that's just one strategy out of many. where we can help brokers improve their profitability and improve their bottom line. And that's why I'm excited about doing what I do, because being a realtor myself, being a broker owner for many, many years, and now doing consulting, I see how we can truly help people with their bottom line, how we can help them with profitability, which is so exciting. And at this point in time, guys, I hope you enjoyed the strategy portion of this presentation. I'm going to pass the baton over to my good friend Carlos now, and he can speak a little bit to this back office management solution that I was sharing with you.
Oh, thanks, Peter. That was awesome. It's so inspiring. You almost want me to buy my own brokerage and do just what you were describing there. It's amazing. And this is where we, we're very inspired to make sure that everything that Peter talks about is part of our culture as well, and as part of our product roadmap. To give you an idea of sort of the features that are there with iBroker today that help support some of what Peter was saying. So these are the key modules. So obviously a listing inventory module where you can manage all your active listings. We have various integrations on the go with companies that will help us grab the information from the MLSs, so you don't have to retype any information from those listings. We also have integrations for products like .loop and DocuSign and SkySlope. So this helps us with grabbing the information from these transaction management platforms, so that when a deal is done with those products, you can basically suck in that information into iBroker, again, reducing the amount of retyping and error-prone activities. So that workflow is there into our transaction module. The transaction module obviously supports all the agent billing, the commission plans, to do all the payments and deposits for the agents. So every transaction can be split into the various agents that are involved, calculate all the commission plans. We have very comprehensive and flexible commission plans that do mins and maxes and caps and different various levels of splitting of commission. So I think we've seen a lot of what's out there. Every once in a while we still get challenged with different plans, but we're always adapting to the new plans that are out there and helping you guys with making that billing process really easy. We are working on a number of detailed reports. We have some already. Part of our partnership with Peter and the Profit Center is to build out more of these reports that focus on the right things and focus on the right measures. So the reports are continually coming through. We also have a context module where you would manage all of your buyers and your sellers and potentially other vendors. So that's, again, avoids retyping. And then we hope to leverage that in the future with other kind of CRM kind of functionality. In addition to that, we are also, I should mention actually QuickBooks. So iBroker does focus on the calculation of all the billing reports and all the commission plans. We don't do a lot of the accounting, the base accounting. We thought that's something that we wanted to partner with, probably the most used or is the most used accounting package in the world. So we use QuickBooks as our accounting package. So you can put all your information and all the transaction details into iBroker, and then we will push the appropriate information into QuickBooks to then run your actual accounting in the back end. And that has obviously their own type of reports for managing your actual accounting side of your business. So we have a very good relationship with them, and I'll get into a little bit more about the kind of things we're doing with them. These other two boxes at the end here, the recruiting and the goal setting. So these are tools that we're working on right now actively. A recruiting module where not only just to track your recruiting efforts and track your interviews and all the different candidates that you're looking at, but also integrating again some of Peter's knowledge in this area where it's not just about hiring somebody, but also looking at potential comp plans that they're on, either if you're doing a recruit, for example, from an existing agent that already is in another office, you could potentially show how your comp plans in your office could actually benefit him by joining your office. So again, leveraging a lot of Peter's knowledge in this area for a really great recruiting module. Along those lines, we have a goal setting module we're working on, which touches on all the things that Peter was talking about setting goals at various levels, not just, again, focusing on revenue and agent growth, but really focusing on profitability and month-to-month analysis of your gross profit of each agent. So those are modules that are in the works right now. And those are the kind of things that we have in iBroker today. So to give you an idea of the overall data flow, again, we try to keep this as simple as possible to reduce the amount of effort that your staff and the potential error prone data entry kind of things that happen. We already have integrations with Dotloop, DocuSign, and SkySlope. So if you use those tools, it's a very simple process for you to click a button and pick your transaction from one of these products, and it initiates a brand new transaction in iBroker. We're continuing to add to this list. We have other transaction platforms that are interested in integrating with us, and we continue to add to this list of integrations on that side of the fence. Once you're done your transaction in iBroker, like we mentioned, there's a feed and integration directly into QuickBooks, where we will be able to, right now it's mainly a push, but we're going to do a pull as well. We can actually bring in some of your expenses for some of that reporting that Peter was talking about. In addition to that, we also actually run this product called iFranchise, which some of you may be familiar with. This is a tool that many of the franchise level companies use, like Remax, to collect the monthly reporting. So we integrate with products like this so that reporting up to your second level franchise is very, very easy. It's a click of a button, summarizes all your reporting for the month and sends it up to the second level. Right now we're doing this with Remax and very integrated. We're working with in doing this with Berkshire Hathaway and other franchises as well. So again, trying to keep the data flow as automated as possible and make your lives easier, and hopefully make you some money at the same time while you're doing this. So along those lines, we would like to, for all those of you who have participated on this webinar, we would like to offer you a special deal. So even though iBroker is very, very cost effective, it does target the sort of small to medium sized offices. On average, to give you an idea, iBroker is about a $5 per agent per month cost. It's very, very cost effective. And but in addition to that, for participating on this webinar, we'd like to offer you a 3-month free commitment. Or sorry, with an annual commitment, you get a 3 months for free, which is basically a 25% discount. All you need to do is go to goibroker.com, and there's a place there where you can schedule a demo. In addition to that, like I mentioned, we have a really great relationship with QuickBooks. They're very supportive of what we're doing, and we have managed to secure a deal with them that for all new iBroker customers, they'll also get a discount off of the actual QuickBooks product of 30%. So that's very exciting as well. So in addition to that, I know that Peter also has some nice offers for everybody who's participated on this webinar. Peter, we'll take it away.
Absolutely. Thank you very much, Carlos. Yeah, with the Profit Center, as you know, there's this strategic integration of information, but how we, as you heard me describe on how we normalize data, we call that a broker profit analysis or brokerage profit analysis. It's a product that we normally charge $3,000. It involves a number of calls and strategy and so on. Because of our relationship with iBroker and any iBroker clients and anybody on this webinar, we're going to offer that at a ridiculous price at $9.95. Want to let you know too that what you saw us do on the broker side, we also do on the team side. And this is becoming a huge part of our business. We know a lot of brokerages are struggling with teams. We also have discovered a way in order to analyze teams and how to analyze their profitability. So we're really excited about that product too. Same offer applies on that respect. Again, we've done over 600 brokerage profit analysis over the last 10 years. We know these numbers better than anybody you'll ever meet. There is nobody who's normalized the data like we have and can give you the insights, because not only can we analyze your office, but we'll be able to compare it to peer data throughout North America and within certain regions, specifics to even comparing you to your peers. So real excited about that. Feel free to take us up on that potential opportunity. And at this point in time, I would like to pass the baton over to our good friend Victor and say thank you for the opportunity.
You bet. Peter, I just want to tell you, I got more out of that session than I ever expected. I really appreciate the way that you apply a strategic focus to operating brokerage. It's just an incredible job. And Carlos, we didn't really go through your product today, but I know you guys have done a magnificent job of putting that together. And certainly the ability to work with somebody as astute as Peter to be able to generate reports out of the accounting system that allows business owners to really track their profits and to stay focused on KPIs or key performance indices that are really going to make a difference in their business is certainly a great way to frame success for people. So I do want everybody to know we're about to get to the Q&A session. So please put your questions in the questions dialog box and we'll have the appropriate person answer them. We have a few questions that came in already. We will be sending a recording of today's webinar to everyone, and it'll have the contact information there if you guys want to follow up with either Peter or Carlos to learn more about the types of services they offer to brokerages. So at this point, we're going to stop the recording. Just wait 1 second. Okay, fair enough. So I do have a few questions. Let's just get started with Peter. Now, Peter, you mentioned teams right at the very end of this. Do you see it prevalent for real estate brokers to begin to spawn out accounting systems for teams as well, so that brokers can actually coach teams much in the same way that they get coached themselves?
Oh, absolutely. And teams is becoming more and more prevalent. Of course, with that comes the challenges of understanding how to handle them, how to manage them. We're going to have some significant conversations with iBroker too in respect to how to do that and how to do it at even a higher level moving forward. But yeah, the team profit analysis piece that we do, is very important because with every broker that's on this webinar, it's important for them to show value to their teams and how they can help them move them forward in profitability. So again, and then there's the challenge on the broker side. How do you compensate yourself efficiently and significantly enough in order to make this a profitable win-win for everyone? So absolutely.
So you talked about getting $10,000 per realtor. Do you also apply that to a team? So if you have a 10-person team, you're expecting $100,000?
That's a great question. In fact, I didn't expect that question, but I'm going to tell you straight up, the answer is yes. Now, if that's the number, if 10,000 is the number, I would suggest that from a benchmark perspective and analyzing 600 operations over the last 10 years, I think a significant or a decent benchmark, or let's call it my benchmark, is 13.5 per realtor. Now, I might suggest that you could modify the team member objective down to about 10 per person in this respect, but pretty much that's your bang on.
Right on. Excellent. The next question, I'm going to just ask this for Carlos. You talked about a number of integrations for the platform, and one of the ones that we didn't see was Transaction Desk. So one of the people wanted to know if Transaction Desk is an option for integration.
Definitely, we are looking at any company that's willing to integrate with us. We have a team that specifically works on integration. So we don't have them on our list today, but we're definitely reach out if that's an interest, because we've had a lot of experience over the years integrating with various systems, and we can generally get that out in a fairly short period of time if there's interest. So definitely we'll take that note and look at that option. Great.
And you got DocuSign as an integration already.
Yeah, DocuSign is a big one, and we're mainly that's for their transaction rooms, but we're also looking at even integrating with eSignature on that for.
I think the question was regarding Instanet, which is super popular, and if I'm not mistaken, between Instanet and Zip Forms, those are the two major forms providers, and they're both moving into transaction management as well.
Right.
But it looks like you have a lot of transaction management integration. So
yes,
it's good to know that you're open to integrating with anybody who wants to play. And certainly, if customers drive that, then that you guys should be responsive to it.
Yep.
Peter, do you have clients do you have iBroker clients that are using your services now?
Yes, we are, and it's exciting to have that because that allows us to keep evolving and developing more reports that we feel are necessary for profitability moving forward. So that's why we're ecstatic about this relationship, and especially working with those existing clients in order just to improve everybody's experience.
Yeah.
Excellent.
Yeah, and if I could just jump in there, like we're referring all of our customers to Peter as well, because we know that he brings a big value to our overall offering as well. So it's a win-win scenario.
Yeah, I'm really looking forward to seeing how you guys take the philosophy that Peter is bringing to real estate brokerage and start to manifest that within the reporting and things like that in your system.
Yep. Yep.
Carlos, can independent firms use your software? Is this only for franchises? Or?
No, yeah, independent offices can use it as well. It does not need to be part of a franchise.
Yeah. Next question also for Carlos is, would this take the place of Lone Wolf?
Essentially, yes. So Lone Wolf does both the sort of back office and the accounting. So that's why our combination of our product plus QuickBooks is essentially the equivalent of a Lone Wolf. However, Lone Wolf does have some other, add-ons that they offer, but the core Broker Wolf product is basically what we are replacing.
Excellent. Again, Carlos, you're really popular today with the questions, but one of the concerns that this broker has is, would the franchise have access to my broker data?
That's a great question. So we know that that's a concern. We've talked to many brokerages, and we do not send anything to the franchise unless you are aware of it. It's typically what we send to the franchise is what you would send to them normally in your reporting cycle anyways. There are some additional pieces of information that we would send up in a sort of aggregate way that the franchise would then provide back to you as a franchisor, sort of as, as value-added analysis, sort of benchmarking certain things, but all of that will be transparent. We don't send information unless you as a brokerage are aware or approve it.
Great. Somebody was asking about .loop integration. I just want to clarify that yes, .loop is integrated into iBroker now,
yes.
Which is a company that's owned by Zillow. So I'm going to try and just take a couple of the questions that came in and compile them together. But hey, Peter, can you just surface a little bit? I know your consulting really works with brokers across any accounting platform, whether it's iBroker or not. But you have a special relationship with iBroker that really saves the firm some money. But there's a little deeper thought process to that relationship. Can you just share why the partnership is so vital and new?
Yeah. Oh, I tell you, I've got so many. I've looked at so many reports, so many income statements. I've investigated and have to investigate all of these back office solutions. I mean, you wouldn't believe what you run into. And unfortunately, many times, it frustrates my process when the information that we need is so cumbersome and so clunky, so difficult to pull. And so just by virtue of what I do every day, when something comes along that just makes your job easier, it's like a shining light, in the darkness. So for me, I've had to look at so many different solutions, and it's so important for me to align myself and my company with a company that I feel is going to be able to solve a lot of the problems, or at least make our job easier. So, yeah.
Well, terrific. Listen, we're about 8 minutes past the hour, and I want to be respectful to all the attendees today. If you can go back one slide real quick.
Yes.
Some of you have a few questions that we didn't get to today. So I would invite you to go to goibroker.com/profit center or call 1-833-8-BROKER. And we'll get the rest of those questions answered for you. So a heartfelt thank you to Peter Mueller, our distinguished guest and CEO of the Profit Center, and Carlos Matias, the CEO of GriftTech, the makers of iBroker, for both participating in this RE Techinar today. We aim to bring the very best information to the real estate brokerage community, and you guys certainly served us well with what you shared today. So thank you very much. I hope everyone has a fantastic day. Finish Q1 on a high note. Thanks again, and we'll talk to you all soon.